understood it. I mean, I helped others to understand it deeper.
So even after you've achieved what you want to achieve in property, or you are achieving what you want to achieve in property, you've just gone back to your passion. So now it's still allowed you to do it. So whether you've done well in property or not, you'd still be doing maths.
Yeah, definitely, yeah. It's like a side hustle, because basically, you know, with my ones, they're all set up neatly under guarantee rent schemes. So I don't have much of a hands-on approach really. So day to day, I'll quit work obviously, but day to day, there's not much to do. That's why I go to the gym 5 times a week. You can't sit around watching Jeremy Kyle and Homes Under the Hammer and Cash in the Attic all day long. So you're thinking, you got to do something else. So I thought, you know, we just get bored after a while. So I thought, you know what?
It's so interesting you say that, like, you know, for most people, and it makes sense that money's such a main focus, and that's where we want to spend our time, and it takes up so much of our time focusing on that. And we assume that we want to retire on a beach somewhere, and that's an idea of retirement. But that's, in reality, when you hear people who have taken a step back, who have taken some sort of retirement, that kind of novelty wears off very quickly. And it's so interesting to hear where people spend their time, where money's not the main focus anymore. And it's amazing to hear that yours is gone back to your passion, to what you were doing beforehand.
Yeah.
But with that being said, let's go back. Let's go back to how you first got introduced to property in the first place. So you said you were a teacher. Did you find out about property before then?
Yeah, before. So my first one I bought in 2001, a 1-bedroom flat for 70,000. But I was started teaching before that, but I was there in the office, just you know, in between classes. I was speaking to my friends, or my colleagues, should I say, and friends, and he just said, yeah, but him and his partner split up, and he's moved back home with his mum, and he had bought a flat for them to live in, and then obviously those two split. And then he said, oh, I don't want to stay in the flat by myself because my mum can do my washing for me and my cooking. So I'm going to go home. Yeah. So then his flat, he rented out. That was in Tottenham. And he bought that for 52,000. And at the time, I can't remember exactly what he was getting. He said, yeah, I'm getting like £550 or £600 profit from that. So that's my drinking money. That's my beer money. Because he has to go to the pub. So I said, oh, that's a good idea. So I said, oh, did you have to buy it outright? And I was like, no. He said, no, you can get a mortgage for it. Because I was a complete novice. I didn't know anything. He said, no, you can get a mortgage for it. You put down a deposit and then you pay the rest off over 25 years. And then I've rented it out under a guaranteed rent scheme to the council. And I'm getting X amount per month. That just tops up my wages. So that's when the idea first got planted in my mind. I'm thinking, oh, that's not a bad idea. And then I was still living at home at the time, and I looked at my wages and so forth. It wasn't that great. And I said, I need to earn a bit more money if I'm going to move out and support myself as an individual. So that gave me the idea of purchasing property to have some more income so I can basically self-sustain myself outside of mum's house, because the teacher's wage wasn't enough, if you know what I mean. So I needed to do that. So when we were speaking one day, I was at home, I thought, you know what, let me just do some research on this. I didn't know anything about mortgages, fixed rates, variable rates. I didn't know anything, anything at all. I went into Cheltenham and Gloucester back then, because I thought you can just go into a bank and then just ask for a mortgage. I spoke to the advisor, sat down with him. He said, yeah, so how can we help you? He said, oh, I'm interested in buying a property. So I was like, can I just sort it out today? I mean, he looked at me and he just laughed. He said, what? You can't just come into a bank and like buy a property. And then he taught me through what needed to be done, because I didn't have a clue. He said to me, yeah, we need 3 months bank statements, 3 months wage slips. You need to have good credit history, and also you need to be on a voters roll, etc., etc. So he broke it down to me. That's when I was about maybe 21, 22. I said, oh, okay. So I went away, got all them things in order. And then I said, when I was still living at home, I started searching using the Enfield Independent and Enfield Gazette newspapers, because it wasn't Rightmove, wasn't Zoopla, wasn't onthemarket.com. that wasn't around. It's just, no, I don't know, just paper every Wednesday.
There's a lot of people listening to this thinking, where would I go to if I didn't have these things? It's like unbelievable.
Exactly.
Carry on. Yeah. So you were looking at the local newspapers and things like that. Yeah.
Yeah. So it's like bare essentials, just basics, back to basics. And then we used to book appointments, obviously on your mobile. Was it M301 back then? One-to-one mobiles.
Yeah.
So I booked an appointment, went to go and view the properties, and then eventually I found one for 70,000. Put down a deposit. I had to work quite a few jobs because I was still working in Sainsbury's, still doing a little bit of tuition, started teaching, because he told me that you needed to have a decent salary and may time your wages by at least 4 or 4.5 in order to get the mortgage plus your deposit. So I done my maths, my calculations for my full-time, for my jobs basically, to find out how much I needed to get started at that time. And then I bought my first one, like I said, for 70,000 rented it out after that under a guarantee rent scheme. And I thought, yeah, this is all right. So that put an extra £550 in my pocket, something like that, on top of my normal wages. And then I was slowly getting towards being able to move out of my mum's house and support myself, like just bills, you know what I mean? Just energy bills, car payments, mortgage, food, and so forth. But that was the main reason for me to get started, because wages wasn't enough. So.
I mean, you really jumped in though. I mean, you know, just from that conversation with a friend or colleague at work to then going down to the bank and then them telling you what you needed and then going out and getting a few jobs to make sure that you meet the criteria. That's a lot of commitment up front. Was there another main driver in your life? Did you have something, even before you discovered property, was there a drive, a mindset that you wanted to do more, you wanted to be better in any way, shape or form, or did you just fall into this?
Yeah, mainly fall into it. I did have a few books in the past. I was watching Sarah Beanie, Property Ladder. I used to watch the £1 Million Property Experiment on Channel 4. So I used to watch all of these programs. I think at the time, Homes Under the Hammer more or less it wasn't started actually. I think it started in 2003, I think. But all them programs went on, but I watched the Sarah Beanie ones and that gave me an idea of, that's like just a good idea. But there wasn't really any drive. I just wanted to have more money so I can move out initially. And then
so there was no thought of financial freedom at this particular point in your mind, or okay, I want to be a millionaire, or I want to, you know, do this, have nice things, nothing like that at this point?
No, nothing. It's only when I got my first one, and then my colleague, that same colleague that moved out back to his home, he introduced me to the book Rich Dad Poor Dad, and then I started reading that, and then I was like, whoa, this book's amazing. Like, it's opened up my mind, and the quadrants. I mean, obviously there's 4 quadrants. Yeah, on the left-hand side, you probably read it as well. On the left-hand side, you've got employed and self-employed, and on the right-hand side, you have business owner and you have investor. And most of the wealthier people in the world are on the right-hand side. And if you do start on the left with employed and self-employed, if this is your main goal, then your transition, if that's what you want to do, is to move from the left-hand side of a quadrant to the right-hand side of a quadrant. So at the time, I just read the book. I was employed. I was doing a bit of private tuition. So that's under the S quadrant. Then I didn't have a B really, but I started up a small private tuition agency as well. That was my B. And then the I was a property investing. So I made it like a little goal in my mind to think, right, I'm going to move from the left-hand side slowly to the right-hand side. So after reading that book, that just inspired me to think, you know what, I can do something with this afterwards and just push it forward. And at the time as well, yeah. And at the time as well, I think I only had one property, but back then, and then even then, there was a round of redundancies. We were overstaffed in terms of math teachers. So our manager called us into the office and said, look, we're overstaffed, there's been a government cuts. So we're overstaffed by one math teacher. One of us is gonna have to go. So I thought, whoa, obviously these guys are all older than me. There's one guy that just bought a new house, just bought a new car. He's a main breadwinner in his family because his missus was a housewife. And I was thinking, wait a minute, if he gets made redundant and doesn't find a job straight away, he's in trouble, like he's finished. Whereas me, if I lose my job here, I'm at home, I'm not so bad. I'm only paying my mum like £50 a month in rent money, so I'm all right. So I said to myself, I don't want the organization that you work for to maybe try and control or have a big influence on your financial future. So I said to myself, I want my financial future to be in my own hands. And I saw property as a way of doing that. So I said to myself after that, right, I'm going to try and get more properties and become financially independent and financial freedom, and then ultimate financial freedom, according to Tony Robbins in his book. That was my next plan after that. So that's when I started to really focus and start to buy property after that, just to have that financial security. So if I get made redundant in the future, then at least I can look after myself financially going forward and not have to worry about getting another job quickly or anything like that.
That's such a, how old are you at this point, like roughly?
24, I think, 25. Yeah, 25.
Still, like the awareness to know that, to make that transition, that thought process then. I mean, Rich Dad, Poor Dad, I don't even know how many times it's been brought up on this show, like, but it's that important for people. And I read it and I was very much the same, that those 4 quadrants were such an important part as well for me. And what you're saying about multiple streams of income is huge for me. And that became a big factor in my life, where I didn't want just one stream of income just in case that gets knocked out.
Exactly.
And it seems like that's the epiphany you had as well, obviously working where you were. So I'm going to jump forward a little bit further and get into the world of short leases and how those types of deals and those types of properties came about for you.
Yeah, so at the time, I couldn't afford to buy houses as rental properties because flats gave me a smaller deposit, or needed a smaller deposit to actually build, because the house prices, even back then, for me, on your wages was a bit steep. So I went in on the entry level because I thought, if I buy flats and I need to resell them in the future, you're going to get a lot of first-time buyers, people leaving their homes, or young couples looking for an entry level onto the property market. I could just sell my flats to them if need be. So I thought that's one reason why I went into buying flats, and mainly because of the lower deposits. So I started off there. With flats, obviously they have leases. So I didn't know too much about it then, but I was just buying. Most of the ones that I bought were above 80 years. And then over a period of time, maybe 10, 15 or 10, 12 years later, some of those leases started to fall bit by bit by bit. And one of my early guiders, not really a mentor, but early guiders, AJ, just mentioned to me that look out for the leases in the future. You would need to renew them at some point and so forth. But yeah, so I've always been into leases, but the first one that I bought, I think I extended the lease for that one. I think maybe 4 or 5 years after I bought it. That was my first experience of it. And I basically wrote to the freeholder, said to them that my lease is obviously up for renewal or needs to be renewed at some point. Can you give me a lease extension quote? Gave me a quote. I mean, that's my first experience of it, but I've done it as a voluntary lease extension, not a Section 42 notice. So, but I'm just learning as you go along.
So yeah, no, I'll just stop you there, because I think that there's so many points that you're picking up on that are really important for people. One thing you mentioned was the 80-year mark on a lease. And that is a magic number, isn't it, for people exactly. to be aware of? Because, and correct me anywhere where I'm wrong here, when it starts going below 80 years left on the lease on a flat or whatever property it is, the price of extending it starts to really go up, doesn't it?
Exactly. Yeah.
And the mortgageability gets a lot more, it can become tougher and tougher the lower that lease goes. I mean,
correct.
So that's something to, what's the name of that? It's called is that the marriage value?
The marriage value, yeah.
Point? So if people hear that concept, that name, 80 years, so important for people to be aware of when you're looking at leases. What level do you try to buy at, for a short lease? How low will you go? How high will you go when you're looking at a deal?
Yeah, generally below 80 years, and above 60 years generally is what I go for at the moment. Because because I've got some specialist lenders that I normally use. As you said, most lenders, it depends. There's hundreds of lenders on the market. Now, a majority of them will only lend on leases which are above 80 years. And then when it goes below 80, some of those lenders go. And then you've got other ones like TMW, Paragon, and a few others. Their limit is 70 years. And then after that, all of them say no, and they're gone. And then there's another layer of lenders that will lend to you. Now, these lenders, as I mentioned yesterday, Keystone Mortgages, you also have the mortgage lender, you've got Kensington, you've got Foundation Home Loans, you'll have Land Bay, and you also have Capital Home Loans. Those 6 lenders will lend to you if the lease is lower than 70 years. And they'll give you a normal buy-to-let mortgage, not for about maybe 2-year fixed or 5-year fixed, up to you, or 3-year fixed if you want. And the rates are normal. Like, for example, if you were to go with the mortgage lender, there's no minimum income requirement with them, and the rates range from maybe 2.59 up to about 3.24 at the moment. But that can change weekly and monthly, so that's just active from today. The Kensington, for example, they can do 80% loan to value and also 75% loan to value, which means you can put down a 20% deposit or a 25% deposit on those low lease flats below 70 years. For example, Kensington offer a rate, 75% loan to value, 2.99% interest rate, and 80% loan to value, 3.99. Both of those are 2-year fixed. For the 2-year fixed one, the arrangement fee is 1,999, and for the 75% loan to value one, the arrangement fee is 995. So you can still get normal buy-to-let mortgages with these, just a shorter term. Like, for example, the one that I bought or explained about yesterday was a 64-year lease on it. I got a 13-year mortgage at a rate of 2.79%. Yeah, so 13-year mortgage, 2.79%, 2-year fixed. And obviously your plan within those 2 years is to extend the lease, create an uplift in value, and then after that you can remortgage. If you want, you can take out the funds of the uplift, and then you remortgage it to a new 25-year mortgage on a buy-to-let with the same lender or someone else.
So in a nutshell, for people listening, the whole concept of short leases is you want to buy, and this is your particular strategy, you want to buy between 60 and 80 years. That's how it works for you, because I guess mortgage lending still works at that level, be it few lenders, but there's still mortgages and lenders out there for that level. Mm-hmm. And the cost to extending it is relative as well. I guess it jumps up even higher the lower it gets and the more money you're going to have to put in. But we'll get into that a little bit later. Mm-hmm. And once you've extended it, you vastly increased the value there. So you've effectively added value without actually having to do an extensive refurb or anything like that. Exactly. Effectively, a paper exercise has added value. So when people are looking at like these BRR deals or these BRR deals and things like that, yes, you can do that, but this can be tacked on, or this is even better because it's just a paper exercise.
Exactly,
and you can still remortgage afterwards. Right?
Exactly about paper exercise. So exactly equivalent to the BRR strategy, but less work. All you have to do is pick up a pen, sign a few documents, or type a few letters, email back and forth with the freeholder and your solicitor, and you get exactly the same amount of uplift as if you do in a BRR strategy, or if you're going to reconfigure it from 1-bed to a 2-bed or 2-bed to a 3-bed. Exactly the same thing, but less effort, less work. So it's good. One more thing I have to mention, actually, with those 5 lenders, the first 5 lenders that I mentioned, the lease at the end of the mortgage term cannot be less than 50 years. So that's why I was given a 13-year mortgage for this one. So that one was 64 years left on the lease. They gave me a 13-year mortgage. So at the end of the mortgage term, if I was to stay for the length of the mortgage, the lease cannot be lower than 50 years. With Capital Home Loans, That one, their one's even lower. I think it's about 40 years, but the rates are a bit higher in that sense.
But I guess the plan is for most people and for yourself is just get a mortgage to get going. And the plan is always to extend the lease within a couple of years, right? So you can add that value and you can refinance onto a new product entirely, which is going to open up that product pool again when it comes to mortgages.
Exactly, correct. I mean, some of them, as you mentioned, some of them I just buy with a low lease. I don't need any major work, maybe a lick of paint or maybe changing the carpet. And then there's some that get offered to me that need or can be refurbed. So needs new windows, bathroom might need doing, kitchen might need doing, as well as extending the lease. And then there's ones where you can reconfigure the floor plan from a 1-bed to a 2-bed or 2-bed to a 3-bed, and it needs a refurb, and it needs a lease extension. Them ones are called a triple threat. So them ones.
go through the triple threat again. Go tell us what the 3 are. Let's break it down for people.
Yeah, so you've got basically the BRR, so ones that need refurbing. Yep, so these are new kitchen, new bathroom, new double glazed windows, for example. Yeah, so
a general refurb, kind of what people will have seen on Homes Under the Hammer and all that stuff back in the day.
Exactly.
Change the kitchen, change a bathroom, uplift the value, make it more modern. Right, that's number one. Go.
And then number 2 is reconfiguring. So, for example, you move a kitchen from the kitchen into the front room. It's open plan kitchen diner in a way, and the old kitchen, should I say, is turned into a bedroom.
Yeah, those large 1 bedrooms, those large 2 bedrooms can be added on. They turn from a 1 bedroom to a 2 bedroom, or a 2 bedroom to a 3 bedroom, and you add an extra value that way, right?
Exactly. Yeah, that's 2.
That's brilliant. Yeah.
I mean, the third one is obviously extending the lease. So sometimes you get flats which have all 3 that need to be done. So in that case, you can probably pull out all of your money rather than like 82% of it or 75% of it, because there's more work that needs to be done.
I mean, that's a brilliant tip right there for people. If you take nothing else away from this whole sit down, like think of it as a triple threat, and you're really sweating the asset there, aren't you? Because you're maximizing the amount of value that you can get from one property. And like you said, pull out all your cash potentially. And some people might have just looked at it as doing the refurb. Some people might have just added the bedroom. Some people might just do the lease. The more you can do in one property, the more creative you can become, the better that deal is going to be. Absolutely. Exactly
that. So yeah, it's a good thing to do. And what I've found is a lot of individuals, because they see it's a low lease on Rightmove or Zoopla or on the market.com, for example, they say, no, I don't want to touch it. It's too much headache, blah, blah, blah. That means there's less competition for that type of property out there. So, for example, there might be 10 or 15 buyers going for that 1-bedroom flat that looks nice, nothing wrong with it. But for my ones, there might be only maybe 2 or 3 people that are going for my one, which is good. So that means you can get more of a bargain because there's less people going for it. And that is it's just more niche in a way. So there's more of a chance of me actually getting it. So I love it. We were talking about this earlier anyway on Clubhouse about how to search for them. A lot of the time, if I'm using Rightmove, that's my favorite site to search for. If none of the agents have come back to me and said I've got something for you, always look for the properties that have been on the longest. So the search criteria, click on the ones that have been on the longest, and normally there's always 1 or 2 with short leases that have been left on there for a while. That means there's a deal to be had. The longer that's been on there, then the more chance of a deal that to be had. And also sometimes I search the criteria to lowest price. Because normally the ones that have short leases obviously have diminished in value. And again, they come up to the top of a list as the lowest price because of a need for the lease extension. So that's one of the ways that I search as well.
No, I think that's so helpful for people because, like you said, people wouldn't know necessarily how to find these deals. They'd probably stay clear of them. I think there's a lot of people out there, myself included, previously would be very much like, I want freehold. I don't want leasehold. The main reason you might want freehold is because there's a bit more control, a bit more certainty. You don't have to deal with the ground rent, the service charges. But we're being opened up to a completely different world here where, you're leaving a lot of deals on the table potentially if you don't look at these leasehold properties and the right leasehold properties, I guess, which is what we're diving into.
Exactly.
So just go back a little bit. You mentioned about there's a couple of ways to extend the lease, and you mentioned a 2-year time frame. Can you go through those two different ways to extend the lease, just so people can understand what they are?
Yeah. So there's a voluntary lease extension, which can be done, where you write to the freeholder, or your solicitor on your behalf writes to the freeholder, and they ask for permission to extend the lease on your behalf. And then the second way is a Section 42 notice, where you serve that notice onto the freeholder, and they're forced to extend the lease by a minimum, well, by 90 years actually, with peppercorn ground rent. And peppercorn ground rent means the ground rent is reduced to 0. So you no longer pay any ground rent. So a lot of the time I've been doing voluntary lease extensions. I've been doing it for a while. I tend to write to the freeholder myself. And when I ask, or when I write to them, I ask for quotes for a lease extension to 99 years, 125 years, and 90 years above what the current lease is at the moment with peppercorn ground rent. And if it's a conversion, for example, there used to be a house and it's been converted into 2 separate flats, I normally ask, is it possible, or will you be willing to sell me the freehold? And at five different occasions, I've managed to purchase the freehold of that building as well, which has been good. So yeah, so I write to them voluntarily. We might get 2 or 3 emails back and forth, like a bit of tennis. They want this much, I want this much, and then so forth, and we come to an agreement. And then once we come to that agreement, then like I mentioned yesterday in my presentation, they'll write to my solicitor, and then you have 3 months to complete the deal. But that should be, that's more or less a formality anyway. Once you agree that premium, at least extension premium, there's not much to do afterwards. There's 2 options that you can do. You can either get a new lease created, which will cost a bit more money, or you have an old lease with an adaptation to it. So what I'm going to be doing is, with most of mine, is an adaptation of the current lease, which is roughly about 3 separate pages stating the new lease length, the new ground rent requirements, and the freeholder's details, name and address, my details, name and address, what solicitors have done it for me. I sign, they sign, and then send it off to land registry. I mean, it's done. Obviously pay my premium as well. I mean, it's done. That's what I've been doing lately. With a Section 42 notice, your solicitor, it's best to get them to do it for you, and you serve it to the freeholder. And then they are obliged, like I said before, to give you 90 years on top of what you have at the moment with peppercorn ground rent. And then if there's any form of dispute, they're going to come back to you with a premium amount. If you don't agree with it, you can always dispute it and get a surveyor involved, a leasehold surveyor involved. They can revalue it or value it and then send it off to them and so forth. But there's ways that you can do it to actually agree the premium.
So with both options, with the voluntary method and with the Section 42, do you get the current owner of the house or flat, sorry, to serve the notice on your behalf? Because wouldn't that shorten the time frame? It's 2 years, isn't it, that you've got to have lived there potentially or something like that. Is that right?
Yeah, once you purchase a flat or a leasehold residential property, by law, you're not legally, not allowed, but you're not legally, technically allowed to extend it within the first 2 years of ownership. But you can write to the freeholder, or your solicitor can write to the freeholder and ask for permission from them to extend it within the first 2 years of ownership. So I've done it all different ways. So I've done somewhere a sale's going through, and I've asked my solicitor to ask the freeholder, because they're going to contact them anyway during the process. And I've asked them to ask the freeholder if they're willing to allow me to extend the lease before 2 years of ownership. I mean, almost all of the time they've said yes, because they want that premium, that nice fat lump sum coming into their account.
That's what they've been waiting for too.
Exactly,
right?
exactly. It's like Christmas for them. Yeah. So they're like, yeah, I'll take that. And then, so I've done it that way. And then the other way is also to serve a Section 42 notice during the purchase, but the current vendor will serve it under their name. And then what will happen is when you complete, that Section 42 notice is transferred over to your name. And then that makes the process a lot faster. So as soon as you complete, you can extend it within the first, I don't know, 2-3 months or 2-3 weeks, whatever it is, depending on the process. And then because it's assigned over to yourself, and then you just continue it that way. As well, when you're serving the Section 42 notice, or they're serving it on your behalf, if a transaction is going through, if you're in dispute about the cost, what I would do is probably get your solicitor to serve it on their behalf. So they're going to have a solicitor for their purchase or for their sale of the property. But what I've done as well is asked them to be represented by my solicitor, because I'm going to be taking over that Section 40 notice afterwards. And then that way I've got a bit of control. I mean, I can negotiate the premium while the sale is going through. And then once I agree that premium, get the keys complete, and then I finish it off after I complete it, basically. So there are different ways around it.
So it's definitely in your interest to cover, you know, those extra solicitors' costs and things like that, to have more control and get the ball moving faster so you can complete and extend that lease as soon as possible.